Let's go. Good evening. Happy Monday, everybody. If you're on this call right now, you're on being here. Welcome to this Monday, September 30th, 2024, the last day of the month, but not only that, the last day of the quarter. And bear with me a second, guys. I want to make sure that my sound is good, good, good. Let's go. There we go. All right, let's go, guys. So once again, welcome to the night. I'm excited to be here with you in this conversation. For those of you who are joining in from YouTube, those of you who are on the call with me tonight on Zoom, and those of you who are in the Truck Profit Academy, welcome. Good to be with you people tonight. All right, so let's talk about a few things. We're going to get started real quick with this. The first thing I want to do is just go over the ground rules here in the introduction to ground rules. Of course, By the Books Consulting is the company. And you can reach us at 888-4BTB now. That's 888-428-2669. You can reach us on the web at youraccountingsuperhero.com. You can reach me directly at cbulgen@youraccountingsuperhero.com or at cheston@youraccountingsuperhero.com. So what do? We do the accounting, we do the taxes, we do the tax strategy, and we also make sure you have organization in your business, in your trucking company. And we help you with the technology to do that inside of your business. And we do fleet advisory, business advisory related to your business, the trucking company that you have. So that's what we do. Really, the intention is to make sure that you're able to make more money, keep more money in your pocket at the end of the day. That is our mission, to make sure we help enough of you as possible, as much as possible, rather, achieve that outcome and do it while maintaining peace of mind and ease throughout the process. So that's the intention, that's the mission of what we do here. And this conversation is a part of that. So again, this is a part of that. It's the Truck Profit Academy. You can go to the truckprofitacademy.com and get registered for our Truck Profit Academy. This is a free group. We move locations from prior locations. So we actually changed the platform. So now we have a new location. So you can go here, the truckprofitacademy.com, and get signed up here and get access to that. So those of you who are members of the old location, tonight is the last night. Today is the last day that we're in the old location. We're moving to the new one beginning tomorrow, October 1st. So excited about that transition, guys. And basically that community is designed to help you be inside of an environment where iron sharpens iron in the trucking industry. So take full advantage of that, guys. We have a few things coming down the pipe with the Truck Profit Academy. A mastermind is one of those things that we're building out. And you keep an eye out if you're in the group, if you're in this Truck Profit Academy group, just keep an eye out for the surveys coming this month in October to get a gauge on what content and what formats we want to use in that mastermind so that we are getting the full amount of value. So the intention is that those inside of this mastermind, they get accelerated results in their trucking company beyond whatever shows up in the market, beyond whatever reasons. You just show up and show out. You get what you want inside of the trucking industry. So over the next 12 months, that could be adding another zero to the bottom line. And that's really what that looks like. And that will be the intention of that mastermind. Okay. So keep an eye out for that coming up down the pipe. That's going to be only exclusively in the Truck Profit Academy community. And again, it's free now to join that community up until December 31st of this year. We're doing a free profit and cash flow analysis. You can stop wasting time and increase profits and cash flow as soon as today by hopping on one of these calls with me or a member of our team. So that'll be the intention there, is to make sure that you're able to stop wasting time and increase your profits and cash flow. And whatever that may look like with you, depending on where you are in the industry, in the phase of things anyway. If you are brand new to the industry, or if you've been established for a while, and you're just looking to get to those next levels, it really does help to get an extra pair of expert eyes on the situation to help see what may not have been visible before. Because we have blind spots. All of us have blind spots, and this is designed to help get rid of yours. So you can do that by going to youraccountingsuperhero.com/book-and-appointment. All right, so let's get started, guys. The following is for educational purposes only, is not to be considered financial, accounting, and/or legal advice, please consult your tax, accounting, and/or legal professional for specific advice. So today we're talking about pretty interesting topic here because it may not be as straightforward for a lot of you as what you may think. So this topic is income, wages, tax, and compliance when it comes to that. And I want to make sure we set you up to win in this conversation. So when I think about this topic, I can feel like a lot of pain and a lot of stress around it for people that are in the trucking industry. A lot of the times I'll see it and people just don't operate in a way where they're setting themselves up for long-term sustainability. There's an out of compliance, there's an out of alignment. So what does that look like? Well, when you and I go out here and do business, the government expects us to behave in a certain way and to honor certain protocols so that, whatever you may think, they have it that is, for the benefit of, the nation at large, and, believe it or not, this country is designed for business owners to succeed. That's how I believe. That's what I believe anyway. It's designed for business owners to succeed. And there's no other place that I'd rather be than in entrepreneurship and in business ownership. And when it comes to that, we want to understand the rules of the game so well that we can play the game at a high level. What game is that? The game of entrepreneurship and business. So as the owner of a trucking company, you're in this realm. You're in this world of entrepreneur, business owner. And for you and I to succeed at a high level in this world of entrepreneurship and business ownership, we want to understand and master the rules of the game as such so that we can win very easily on autopilot, consistently, reliably. We don't have anything in the way of that. So we can just have zero traction and have wins everywhere that we are inside of business. That makes sense. So if I were to take a look at, what I see with people who own trucking companies, there's somewhat of a misunderstanding when it comes to wages and income and tax and how to pay people, how to pay yourself. There can be some confusion. I recently spoke with somebody in the trucking industry, and they came to us for some help. Okay, and I can see why they came to us for some help, because they didn't have any type of organization in this realm, and really there was no base understanding of what to do. But not only not the base understanding of what to do, but also there was no understanding of the impacts of doing things the way they were doing it, which is out of a compliance. So, interesting enough, I'm not going to name any names here, right? I ain't going to do any name drops in this conversation, but the people I spoke with, I saw it. I saw when they brought their financials to our attention, and I saw that they had been paying people, and it was a payroll expense that they had listed on their line items for their finances and their bookkeeping. So to me, I see this stuff, right? Like I'm looking line by line on the financial statement, and I'll read these numbers. I'll read what people are actually reporting on their financials as such, where I get like these little ping, ping, ping moments. Like, okay, payroll expense, we usually do that. Well, we have a classification for wages. Then we have not just payroll expenses, but we have a classification for wages that's a subcategory of that. So imagine this, okay? Let me do this so it's pretty clear. So here's what we see, okay? And by the way, it's super important that you have your bookkeeping processes in order. That is really, really tight, or else you can get into a whole lot of trouble with things like this, right? So it also helps to diagnose things when we're doing things in the right way. So we could, clean things up, and then we got a diagnostic of what it was when they were doing this. We could see clearly what was going on, okay? So get this. This is how it comes across, right? Number one, so there's like a parent account. So we have a parent account. and we track finances. Okay, this is what we do. We have a parent account. So the parent account is something like, okay, payroll expenses. Okay, that's the parent account. Now, the parent account in and of itself doesn't hold any money. All right, it's not really, something that we have a transactional flow directly to, which means I shouldn't see a number directly associated with this. Like, you know, if somebody had like $1,000 that's directly here in the parent account, well, to me, it's a red flag. Well, what is it really? Because there are sub accounts underneath it. But what are sub accounts? Sub accounts are like ways to organize things. It's like imagine this, you have in your kitchen, okay, you have a bunch of cabinets in your kitchen. And inside those cabinets, if you're doing it pretty well, in those cabinets, you'll have either like containers or shelves, right, inside the cabinet. And because you have containers or shelves in the cabinet as a whole, everything belongs on one of those containers or shelves. If it works well, okay, if it's organized, some of y'all, me too, by the way, we go into that cabinet and things are just not on the shelves inside the cabinet, so it's not really organized the way it's supposed to be. There's an out of alignment there. We know it's supposed to be put in some type of order. All right, now get this. Parent account is like the whole cabinet. That's what that is. So if I see something just in there, not in a drawer, then there's a red flag. It needs to go somewhere. It's not organized. Okay. So sub accounts are like those shelves inside of the cabinet or those containers inside of the cabinet. That's what sub accounts are like. So when they came to me, we were reading the financial statements. We saw that something was in the parent account and it wasn't in these sub accounts. The sub accounts for the payroll expenses would be like, okay, payroll fees that would be associated with, this could actually be two different things, and either one is fine. Payroll fees could be a subcategory of accounting, or it could be a subcategory of payroll expenses. Okay, payroll fees. So we have that payroll fees. Then we have payroll taxes. Then we have wages, right? Get that, right? Wages. And then we have officer. Now, if you have an S corp, you'll have something like this: officer compensation. And then we have benefits, right? Any type of benefits that you may issue out. That could be a subcategory of the payroll expenses. Okay. Okay. So now they were paying people. These people, they were paying people. This company, and it was up top here, right? Up top there, listed in payroll expenses, and it wasn't in any of these subcategories beneath. Okay. So it's like ding, ding, ding. What is this? Let me go explore. And as I explore, they had people categorized there, like people they were paying that were categorized there. And, whenever we're paying people, we need to know, one, like, are they being paid W-2? If they were being paid W-2, well, they would go right in this letter C, right there, letter C, in wages, okay, if we're paying people W-2. Now, the other thing that could be here, which we don't necessarily put here, is contract labor. That could be another payroll expense. We can do it like this. These are like 1099 folks. Okay. Now, now guess what? Like if I don't have this located, now a lot of times 1099 could be under the gross, like underneath the direct cost, which is like up in the top lines. We talked about that on another call. If you're not familiar with that, you can actually look back into the videos that we've done in the past to go over what the direct costs are, because it could be direct labor. In your case, it's direct driver costs. Okay, that's what that could be for you. But if we're going to do it like this, when we keep track of it underneath payroll expenses, well, then if I'm going to pay somebody for services performed as if they were employees or contractors, well, they will either want to be boom in C or boom in F. Look at that, man. That's like I'm doing that really well with my finger on these letters, man. I'm doing that spot on. Like I love it when a plan comes together, guys. All right. Now, when it's not showing up that way, when it's not either in the wages or in contract labor, and it shows up, it shows up exactly, it shows up in the parent account. Well, it's out of alignment. So I'm going to go investigate. Well, where is that going to? Okay. Now it's important because if we're paying people, it has to be reported this way, guys. Either wages or contract labor, 1099, it has to be reported this way. Because if it's not, well, then it's going to be out of compliance. It's like, well, who got what money? Because the government looks at it like this. We need to account for everybody's income. So if it goes out from you as an expense and it's going to somebody else as an income, like your employee, like their income is based off of what you pay them, right? Or your contractors, your 1099 people, it goes to them for their income. Well, that wants to be reported so that the IRS knows, well, how much income are they making? So that they can collect tax money on that income. Sounds great, right? It's fantastic, right? They want to collect tax money on the income people make. Right? People are like, man, you freaking, why do you got to take my money? Right? That's how it goes. But that's what they want. They want to make sure that you're reporting the income that pays out to people, like the expense you pay out that you're paying as income to others. They want that to be recorded. Okay, they want to make sure that's reported. And if you don't do that, it's serious business, right? You'll get into major trouble for not doing that. So get this, like, so I'm looking at this and I'm seeing inside the parent account now, that was in the parent account, that they had money going out to people. And I was like, whoa, because of what I just told you, I'm like, whoa, what is this? I gotta get on the phone call. I gotta, ding, 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 call these people up. Hey, look, I'm seeing that inside of here, you've been classifying these people, you've been paying them and classifying as payroll expense. What's that about? Right? I'm saying, what's that about? So they tell me, it's like, oh yeah, we're paying these people. I was like, okay, well, we don't have any W-4s. And W-4, by the way, is the information that you would have on file for any employee. So somebody who's getting paid W-2, they would fill out a W-4 to ensure that you have all their tax information so that at the end of the year, you can submit a W-2 for them. So we need that W-4 from them in order to submit a W-2 to them. That's how that works. We didn't have one of those for any of those people. And by the way, we didn't have any W-9 either. So W-9, similar to a W-4, but they're not for employees, they're for contractors, W-9. So we can issue a 1099 at the end of the year. So they give us a W-9, contractors, they give us a W-9 so that we can issue a 1099 at the end of the year or the beginning of the following year, rather. So if we don't have that information on hand, it's like, well, there's an out of compliance. All right. So we want to have one or the other. All right. So they were paying these people without having any of that information. It was just random names, no addresses, no information for 1099 or W-9. I'm sorry, W-9 or W-4 rather, to pay them. And it's like, well, that's a red flag? Because money's going out, you're saying that it's a deduction, and you're paying these people, and it's not being reported to them as income, as in the eyes of the IRS, and that is illegal. Okay, that is illegal to do that. Okay, so you want to make sure you have the systems in place to do that. So long story short, we had that conversation to make sure that they're good to go. Now, if you're winging it by yourself and you're not really taking care of this the way that you need to, well, you're putting your company at a risk that's really unnecessary. Why would you do that? There's so much that you're going to benefit from by being able to stay in the industry for a long time to come. Make a lot of money, create generational wealth, create legacy, freedom, live it up, do everything that you possibly can do that's possible because you're doing very well inside of your business. But why put it at risk for something like this when it's a simple process, an organizational process that can be taken care of consistently, okay, once you have the structure put in. And, at the end of the day, what we want to talk about here in this conversation is for you to be able to have that ability to maintain a level of compliance in this area, but also do it in a way where you can actually still profit and benefit at the same time. So let's back it up a little bit. Let's talk about it. Okay. Now, I'm saying that about that company that came to me because we saw that, right? But then once we see it, it's a process to make sure we rectify it. right? There's more to be said about their whole situation because some of you guys are doing things that are straight up, it's just not good business to be hiring the people that you hire just because you figure you need people to work for you and they're just readily available, but they don't have the proper documentation. You're not keeping it on file. You don't have the structures in place like to honor when you bring them on board. Like you're not collecting all their documents. It's good. It's good that you're in the trucking industry because there are things that really need to happen according to the FMCSA guidelines when we onboard people, like the pre-employment screening, the MVR, the background checks, the drug screening. All that is a part of the onboarding process that, by regulation, those must take place if you're a motor carrier. Okay. Now, even though those are the regulations, doesn't mean that every company abides by those regulations. But guys, I want to emphasize again how significant it is, how important it is to make sure that you keep yourself above reproach. One of the reasons that the company that we have over here is called By the Books Consulting is because, man, I like doing things by the book. Why? Because I like peace of mind. I just do. I don't like to think about, something coming back on me later on. I want to be able to move forward fast, hard, and heavy without any of those things in the way. And I think that's the best way possible to do it. Because if you can go full energy and attention in the direction that you want, you're going to have massive results in your business. But when you have something lingering in the background that's kind of holding you back, like, man, what if I actually get big here? What if I actually grow to those levels? Am I going to get caught for the things that I'm doing? Now, if we have that in the back of our minds, then we're not going to move forward with velocity. We're going to be held back. It's just the law of nature. Okay. So this conversation really serves to make sure that you're freed up to move forward hard and heavy to whatever levels you want to take your company to. All right, and that's going to happen by you understanding these principles inside of paying yourself, paying your people in a way that's compliant, that gives you peace of mind, and also allows you to keep money in your pocket. Okay, so a couple of things we're going to talk about in this conversation. I'm going to talk about 1099 versus W-2. So I just talked about a couple of things when it comes to 1099s and W-2s. Like for one, like I talked about the forms you need to collect if you're going to be a 1099 person. Like if you're hiring somebody who's 1099, then you want to collect a W-9. And that gives their tax information so that at the beginning of the following year, you can give them and issue them a 1099 for everything that they've done in that prior year. Okay. And for W-2, we've said that you collect a W-4, which has their tax information for direct employees. And so that at the beginning of the following year, you can give them their W-2 for everything that they've done in the prior year. Okay, so they get a W-4, so you can issue a W-2. 1099 people issue you a W-9, so you can issue them a 1099 for the tax year. Okay. Now, what's the difference really between these two? Okay, 1099 contractors, since it's up here first on this list, and guys, get this right. What to consider? I have this up here. What to consider? CYA. Cover your assets, man. In trucking, you always want to do that. You want to cover your assets in trucking. So that's why that's up here. You want to make sure you understand these principles so that you can do just that. You want to cover your assets in trucking. All right, you don't want to have a situation where you're out there and you lose everything. All right, there's already too much risk involved without you adding any more to it. All right, so now when we talk about 1099 classification, so if somebody's going to work for you as a 1099 person, they're not an employee. Okay, they have to be distinct from an employee. What distinguishes them from an employee? And well, number one, they have freedom. They're not really attached to you per se. They're their own business. They're their own entity. So technically, they can freelance and they can do their own thing if they wanted to. There's a contract between you and them that states that they are a contractor and they are not an employee of your company. Okay. Usually they have their own equipment. They have a list of their own expenses that they incur to operate the way that they operate. And again, they have the freedom to go from carrier to carrier. For example, like the essence of this, what this would look like really inside of the trucking industry, if somebody was a leased on owner operator, right? A leased on owner operator, that this could possibly be a 1099 situation if they're a leased on owner operator. So if they're a leased on owner operator, the way that this looks as a 1099 leased on owner operator is that individual or that business rather, because they are a business for themselves, even though they may have their individual name, they are a self-employed individual. Okay. Or if they have an LLC set up, same concept. Or if they have an S corp set up, same concept. So they'll come and they'll have their own equipment, their own tax ID number. They'll have expenses of their own that they manage, right? They have some negotiating power in terms of the contract that they have between you and them. They may not, they may have one piece of equipment that's leased on to you and another piece of equipment that's leased on to another carrier. Okay, this is really what it looks like blueprint-wise if you're going to have a 1099 leased on owner-operator in the trucking industry. Because now the more they operate like this, the more you are covered when it comes to safety inside of compliance. Like you're not at risk. Now, if their behavior pattern is, okay, well, I'm leasing on to you with this vehicle. This is a pretty good relationship with you. But I have another relationship over here where I have another piece of equipment and I'm leasing on to them too, and I have a good relationship with them. So I'm going to see between the two, which one's actually producing more, right? So if we want to up level, if we want to scale up, we can add more equipment to this carrier, and maybe we can add more equipment to that carrier, depending on what's working the best. Okay, now ideally that would be the strongest representation, the most clear-cut representation of somebody who would be a 1099 owner-operator leasing on to a carrier. Okay, so this is distinct from you paying somebody 1099 in your company and you have the equipment. They have a set schedule that they work with you, right? You have the equipment. You have a set schedule for them that they work with you. So they don't have the freedoms. They don't have any expenses. They don't have any business set up. And they're just there driving your equipment. And you pay them per mile or per load, whatever you pay them. Well, that's not a 1099 classification. Whether you're paying them that way or not, it's still not a 1099 classification. So whether you're paying them saying, okay, I'm going to pay them 1099, I'm not going to take their taxes out, it doesn't matter. They're an employee. Okay. By classification, compliance-wise, they're classified as an employee. And because you're paying them 1099, you are at risk for their taxes. Okay. And possibly more. Okay. So you want to make sure you are in line with that because you don't want to be at risk. So I'll see that a lot with smaller carriers. They don't put their drivers in that drive their equipment on W-2 payroll. They don't do that. And instead, they'll pay them 1099. And because of that, they're actually operating at risk. They're out of compliance. And I don't want that to be you. I want you to have the system set up, the structure set up for you to win. And what winning looks like is that you're above reproach and you're setting yourself up to be sustainable for the long haul without anything there that could actually cause you to be shut down or cause you to have a blow cash flow wise because you just haven't been doing things the right way. And ignorance is never an excuse. Okay. So W-2 people look like this. Okay? W-2 people are the people that actually drive your equipment. They have a set schedule. They don't have any expenses of their own. They don't have a company set up, and they drive for you. Now, if that's the case, then we want to collect their W-4 and want to pay them a W-2 wage so they get a paycheck and all their taxes are taken out. You're paying their half of their FICA taxes and all that. But we can do it in a way, guys, where you can still make out. I want to talk to you a little bit about something called the WOTC. All right, when it comes to this, so let me talk about the WOTC. Now, this is actually the Worker Opportunity Tax Credit. Okay. Pretty cool because in the trucking industry, it will be something that applies very well because, I know Teresa and like her coalition, Teresa Watson, the Minority Professional Truckers Association, they're part of this call too. Welcome, guys, if you're part of the Minority Professional Truckers Association. And, Teresa, has this initiative where she's working with building back out the trucking industry and really working with part of that is working with people who have actually been to prison. All right, so why am I saying that is because there are demographics that you can hire that would actually pay you a credit. And depending on the state, it could pay you up to $9,600 per employee that you have through this process. So what if you hired people and you got like almost $10,000 back because you hired them? Well, that's a win, isn't it? Right? If you're able to do that. just by understanding the behavior patterns to qualify for this tax credit. Okay, so you can do that and get money back in your pocket for paying people W-2. Hopefully that makes sense. We're not going to get into all the details here, but I want to put that out there, guys. You can actually win here as well. Okay. And the other thing I do want to discuss on this call before we wrap it up is paying yourself. That's another thing that gets pretty confusing. I talked with somebody a few years back, a couple of years back, and they had a partnership. Okay. And I looked at their finances, and the partners on this company, they were paying themselves the wages through payroll, which is sort of an interesting scenario, because technically, like if you are the owner of a company and you are a partnership or a sole proprietor, you're not an employee. So if you're not an employee, you're an owner, you don't get a W-2 wage. It's not something that you would do. Okay. But how do you pay yourself in those situations? I'm going to say that one more time so that it's clear. You don't pay yourself a wage. You don't pay yourself a wage if you are the owner of the company as a sole proprietor or partnership. It's a technical out of alignment. It's not something that's compliant. Okay. You want to pay yourself another way. The other way that you pay yourself, like if you're a partnership, you can give yourself something called a guaranteed payment. Okay. If you're a sole proprietor, and also you can also take a draw, right, from the business before I move on, guaranteed payments or a draw, right? And if you want to understand what guaranteed payments are, you can look them up. If you want to understand what draws are, you can look that up as well, okay? But that's how you want to pay yourself as a partnership, those two ways. If you're a sole proprietor, then the way that you would pay yourself is through a draw, okay? All of the profits of that business belong to you. Now, in a partnership, the profits that belong to you are the percentages that are agreed upon by the partners of how much that percentage is that you get of the actual net income of that business. So basically, at the end of the day, when the company makes money, let's say it makes $100,000, you're 50-50 partners, you agreed to have it a 50-50 split between the profits. Each of you has an income of $50,000 for that year, okay? That's what that will look like. That income is yours. The draws are not really taxable. It's the income that's taxable. Okay, the draws are not taxable. It's the income that's taxable. The only time that you would have a draw that's taxable if you take out of the business more so than what the business has in it. And it's possible if you're doing a lot of financing to do that. Okay. And if that's the case, then it'll be a taxable event. All right. So there's more to say about that, guys, but I want to make sure that what I leave you with here is the responsibility that you have to understand, how to be compliant here and how to make sure you set yourself up to win when it comes to paying yourself. All right, so the last thing I'm going to talk about here in terms of paying yourself is if you're an S Corp. S Corp is fantastic because it allows you to not have that high exposure to self-employment tax, which is FICA. But there is a portion of it that is subject to FICA, and that portion is what we call the reasonable compensation part, which is W-2. So that's what this looks like. So there are a couple of ways to take money out of your S Corp. Similar to sole proprietor and partnership, the profits of that S Corp belong to you. Okay, that's a taxable amount, but it's not subject to self-employment tax. The main difference here is that the profits of a sole proprietorship and the profits of a partnership are typically subject to self-employment tax as well, in addition to ordinary income tax. Okay, so I'll say that one more time. The net income of a sole proprietorship and a partnership typically subject to self-employment tax as well. In most all cases inside of trucking, sole proprietorship 100% is going to be subject to that FICA tax in addition to ordinary income tax, that self-employment tax, and in addition to ordinary income tax. Now, I said typically with partnerships, if you're a silent partner, you're not active in the business. Let's say you just invest money and you don't have anything to do with the day-to-day operations, well, then no, it's a passive income stream, so it's not subject to self-employment. You're not trading any services for that revenue that you get. Right? You just put money there and you get money back. All right, so that's a little bit distinct. Now, an S Corp allows you to have the best of both worlds here. You can have, earn income, which means you can run your business and be in your business providing services for the business actively, and the net income of that S Corp is not subject to that additional 15.3% of a self-employment tax. It's not, right? So the part that is your W-2, like your wage. Now, this is required. This is the two ways that you get income from your S corp is number one, through your W-2 wages, and number two, through what we call distributions, which is similar to a draw. Now, the distributions are not taxable. It's just the income that's taxable, okay? And for more on that, guys, we can have that conversation later on. For now, it's been great being with you. I want to leave you here. I don't want to leave you with too much to chew on. I really do want to cover the basics. I really wanted to cover the foundation of this so that you get tremendous value from being in this conversation. And what I want you to do with this is make sure that you are above reproach, number one. Understand the dynamic of how you pay your people and how you pay yourself. All right. How to stay compliant with that, how to be above reproach with that, and how to still win by keeping more money in your pocket with it. Okay. Now, I will say this, we switch people to S corps all the time. And a lot of time when you're making money, it makes sense to switch to an S corp, and there's a significant savings here when you do this in taxes. Okay. So you want to consider doing this, this last part of what we're discussing when you're running your trucking companies, and make sure that if you have not shifted yourself to an S corp and you're making a decent amount of money in that business, it means you have a decent amount of profits. You may want to consider, I invite you to consider, rather, making this switch, because it'll be a significant tax savings from the start. And then you can also have other strategies aligned with that as well. All right, guys, it's been fantastic being with you in this conversation. I'm hoping you got tremendous value from this talk. I will see you next week on Monday. It'll be October the 6th, right? Wow, man, we're in this month of October already, moving that forward. And guys, it's been a pleasure. It's been an honor. So glad to be with you and sharing this information with you. And I'll see you next week. Take care now. Bye-bye.